afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Justin Nielsen here with a breakdown of the action in today's session. Monday, September 16th. It was a mixed day, but it seems like, Justin, all eyes are looking ahead to Wednesday and that big Fed interest rate decision.
Well, I'd say a little bit of both. I mean, looking behind to the last 2 weeks because it was a wild time. And now, of course, looking ahead to see what the Fed is going to do. But we've got some stocks to take a look at, including Mr. Cooper, the Bancorp, and Vistra. We'll also do a quick shout out to Intap as well.
Sounds good. So we'll do a look back and look forward. I like it.
Yes, exactly.
All right. So we'll get to those stocks, but first let's take a look at the major indexes. The S&P 500 today up 0.1%, so continuing its win streak after a strong week last week, as Justin was mentioning. The Dow led the day, up almost 0.6% and hitting another new high. We know lots of Wall Street headlines about the Dow hitting highs, so we cover that here as well. The Russell 2000 up about 0.4% on the day, continuing its comeback. The NASDAQ lagged, so down about 0.5% here today, but finding some support at a key level. Let's begin with a closer look at the S&P 500. Justin, your thoughts?
Well, I mean, the S&P 500 really does look stronger to me. The NASDAQ, it's not just today it lagged. It's been lagging a little bit as some of the Mag 7 were getting out of favor. Of course, there was this big shift last week where it seemed like, oh, are they getting back in favor?
Right.
But the S&P 500 still just seems like it's in a better position. It's closer to highs. It kind of met its hurdles earlier in terms of getting above its moving averages. And again, the relative strength has been a little bit better on that. Again, you're not going to look at the S&P 500 to see the relative strength because you're just going to see a flat line. But when you look at the NASDAQ and you see that in a downtrend, it lets you know that the NASDAQ is lagging a little bit relative to the S&P 500, at least since July. So what do we do with this information? Well, it was, again, I think the big thing was that we had such an ugly start to September. We had our Dow Jones research team telling us that, it was, one of the worst first 4 days of September going back until 1946 for like the S&P 500. But then we had a pretty fantastic next 5 days, which is not what you would have expected. So we really defied expectations. So now we're kind of at this previous high level, an area of resistance. I'm okay if we take a pause here, especially since we do have that Fed coming out, build a little platform here, and then maybe punch out of there. And that seems like a lot of stocks are kind of setting up for that potentially. A lot of stocks are getting to kind of their traditional buy points after having crossed over some downtrends and some handles and things like that. So I do like a pause here. Now, look, I've been doing this a while and the market never listens to what I want. So keep that in mind. But if we get a pause and then a punch through, I think that would be the ideal situation. But we're going to have to take it one day at a time.
Yes, absolutely. So this is the setup that we're seeing heading into that Fed interest rate decision. So we'll have to be flexible either which way. And so speaking of, Rachel Fox and I, we're going to be doing a webinar coming up tomorrow, 2:30 p.m. Eastern, 11:30 a.m. Pacific. You can go to the homepage of investors.com, and in I think it's the today's spotlight section, there should be a webinar promo there. It's called Trend Lines Over Headlines. And I think that says it all there. So we're going to talk to you about how to prepare for big news events, how to prepare your portfolio, what to do, because we've got to be nimble. So we'll be going through some portfolio management strategies for you. Really excited about that tomorrow.
Well, and a lot of times, people, when they see a big move in a stock, one way or the other, a lot of times they want to know the why. And there's no problem with that in general. But sometimes the what that's happening is more important. The reaction to whatever the news is really what you got to pay attention to. Same thing with upgrades, downgrades. You can go through a whole host, even earnings. Sometimes you could give me the headline ahead of time, and that won't tell me what direction the stock is going to go. It's really that reaction. So I really think it's a very timely thing that you and Rachel did. So I'm looking forward to watching it myself.
Yeah, Trend Lines Over Headlines. Check it out. Okay, Let's briefly talk about the Dow hitting another milestone here. Justin, is 42,000 the next magnet to the upside?
Yeah, I mean, there's no reason why the Dow can't hit that. Again, this is not something that we pay as much attention to because it is very narrow, 30 stocks, and it's price weighted. But at the same time, it can be very reflective of what's going on. A couple other indexes to kind of take a look at to kind of get a sense of a little bit more of that bigger picture and not just a very tech heavy. RSP, that's the equal weighted S&P 500. That had a great day today. I mean, that was up 0.7%. So when you take out that market cap weighting of the Mag 7 that is so heavy, even in the S&P 500, and you make everything equal of those 500 stocks, a big difference there. And we've been seeing RSP really kind of do a lot better. And then there's even the New York Composite, New York Stock Exchange Composite. That's 0NYC for those of you using Market Surge. And that's right there at new highs. So RSP, New York Composite Index, and the Dow Jones Industrial Average do seem to be hitting those highs a little bit earlier than certainly the NASDAQ, but even the S&P 500 that does have a little bit of that tech weighing it down.
Yeah. Thoughts on the Russell and small caps?
Look, this was lagging. I mean, if you look at IWM, this was the last one to get above the previous Friday's high. The other indexes seem to be doing it in a bit of a quicker fashion. They seem to be getting to their moving averages a little bit quicker. So this is lagging, but at the same time, the Russell 2000, the small caps, can make big moves and pretty quickly. We saw that certainly in July, the July 11th kind of rotation where a CPI report came out and it was all about the small caps and forget those tech stocks and the Mag 7. So I do think, this is worth watching, being aware of. But there has been, let's go to the weekly chart real quick. There's been a lot of will it or won't it, type thing. A lot of false starts, a lot of tries, and a lot of resistance right around 2000 on the Russell 2000. That's 200 for IWM. But that has been a battleground where I think with it holding above there, it's certainly better.
Yes, it is getting better. Okay, let's take a look at the sector perspective of the day's action. Here's XLF up 1.3%. So financials is definitely outperforming today.
Yeah, and the relative strength line has been looking pretty good on that since July. Fairly strong, and really in August was looking pretty spectacular. Like a lot of things, it came down and found support at its 50-day moving average line. But there's a number of stocks in this area. If you just kind of go through and you're looking at what stocks are moving, and then you kind of look at the industry groups that they belong to, a lot of them do belong to this financial sector. A lot of banks, we could look at both KBE or KRE to reflect some of the banks there. And, that's a pretty decent looking chart as well. So it's not at highs yet, but it does show that it's kind of broken a downtrend. Plus you've got KIE, which is the insurance space. And that's been an area in finance that has been doing pretty well too. And it had a really big snapback. The relative strength line on this has been very strong. And this broke a downtrend. It was coming in a little bit, but broke that downtrend and is looking pretty good.
Right. And Ryan in the group, an insurance name. It looks like it didn't close quite well here today, but an attempted breakout there in the insurance space. And let's take a look at XLU, utilities continuing to rock and roll.
Yeah. So again, a lot of times you look at utilities and you say, okay, look, if utilities are doing well, it's probably not a good sign for growth. But there are times where you can have markets that are doing good and the utilities are still doing quite well themselves. This happened back in 2016 when I first started writing for the paper after, 15 or so years of working for Bill O'Neill. But look, this does happen, and we have a catalyst here that a lot of things that we're talking about with AI, look, just the chips themselves take so much more power, 7 times more power for an AI chip than a traditional chip. And so who's going to be providing that? Who are the beneficiaries going to be? You got to look at some of these utilities as possibly doing okay. And look, we haven't really figured out a lot of ways in which AI is going to be monetized, but you better believe that all the people that are, going to need power, they already know how to monetize that. They know how to make money off of distributing power. The jury's out on that sometimes because they can't, with their capital expenditures, it gets a little bit tough. But XLU, again, you can't deny that this relative strength line has been doing very strong, and it's quite an uptrend. I mean, this did not even come down to its 21-day moving average line as all of this jostling back and forth was going. So strong uptrend, and with a lot of these stocks, you get a yield too. So not too bad.
Yeah, not too shabby at all. Okay, so speaking of not looking too shabby, here's a look at Mr. Cooper Group, COOP, testing a breakout area from a cup with handle base. After a strong week last week, this is a mortgage servicing company. So we saw a lot of home builders and home furnishing stocks and that kind of thing. Anything home related, it seemed like, had a great week last week. And this is one that was right in there with those and following up on that strength today with a breakout.
Yeah, probably a good idea because we did take a look at XLF. Let's just real quickly look at XHB. To your point, Allie, this kind of makes it. I mean, this was a very strong week, a very strong recovery. XHB, which is not just home builders, but you do have some of these ancillary home building related and mortgage and the home improvement stores and so on. But yes, this had a strong move, and so you got to look at who were some of the other beneficiaries. Mr. Cooper is one. So getting back to COOP, which is in the financial space. This is a nice cup with handle. You look at, and I love hovering over market surge pattern recognition because you get the details. A depth of 16%, a handle of 11%. So pretty mild in terms of a correction here. And arguably, this was actionable last week as it was breaking this downtrend. And now you're getting to the traditional buy point of 94.74. So like the S&P 500, we're kind of at these previous levels of resistance. I'm okay if this takes a pause right here. The early entry certainly helps you get a little bit of cushion ahead of time. So I do like starting positions with some of those early entries, these breaks of downtrends. I'm okay. What I'm doing right now is I'm sitting on my hands a little bit and just letting the stocks that I bought last week kind of eventuate. Let's see them move. Let's see them follow up before I start putting more money on the table here, especially, again, ahead of that Fed looming decision.
Yeah. I mean, it's not quite an earnings report for the market, but it is highly anticipated. And we know with other Fed related headlines, there can be some volatility. So it's not a bad idea to want to try to see if stocks in your portfolio can get some sort of profit cushion heading into a risk event. But we'll have to see how all of that shakes out. So,
well, and even, on this Fed, talk, I mean, there's been the, speaking of the will it or won't it, it's will it be 50 basis points or will it be a quarter? It's pretty much a guarantee that it's going to be one of those, right? But wow, the changes day to day sometimes between what the market thinks is going to happen. And look, the market has been wrong on a lot of these. I mean, it wasn't that long ago, I feel like, where it was like, oh, we're going to get 7 rate cuts this year. And I mean, or even, rate cuts are going to start at the end of 2023 or 2022 even. A lot of this stuff didn't come to pass. But right now, I was surprised to see that the Fed funds futures is predicting a 63% chance of a 50 basis point cut. And again, this has changed quite a bit. I mean, it was 50-50 a day ago. A week ago, it was, 30%, for a 50 basis point cut. So that can, again, not just the headline there, but the reaction. If it doesn't do 50 basis points, is there going to be a temper tantrum by the market not getting what it wanted? Or is it going to be kind of like, oh, this was baked in, everyone's kind of happy? And we won't know that until it happens and react accordingly.
Exactly. All right. And stay tuned for more in the webinar. Justin, we should have had you join us too. Coming up tomorrow. But I mean, we've been talking about this on this show, on IBD Live, and other areas as well. So great thoughts there. Let's go to TBBK, the Bancorp. So speaking of Bank stocks in focus. Look at this one, up 4.5% today, continuing its rebound off of the 50-day line.
Yeah, and what I like about this one is this ants indicator that we had in July. This is basically telling you, like, not only did you have some strong price performance, but you had some volume behind it. Now, recently we did have this pullback to the 50-day moving average line. And by the way, personally, I don't just buy something because it has this ants indicator. A lot of times I like to wait and see, okay, how does it consolidate? And I really like the consolidation that it had here. Now it's gotten support at its 50-day moving average line. There was a little bit of higher than average volume, just skirting higher than average volume on the downside there. It's been a little bit lighter on the upside, but today got above average volume. And again, this is comparing it to its 50-day average volume, a really nice price move. So I think this is something that was actionable today. Again, it's in the right space because financial stocks have been doing well. A lot of the regional banks have been looking stronger. A lot of relative strength lines improving on these. So this is one that I think looks pretty good.
Okay. And last but not least, let's go to VST. So in the utility space, this AI adjacent area here, coming back with a gain of 4.5% today. Also a strong move last week. Let's see what the gain was last week. Up 16%, more than the first week of September's decline, which was down almost 14%. So you're seeing this a lot for a lot of stocks, like what they did in the first week of September, a number of them making up that much, if not more, last week. And so now seeing continued strength and I think an entry point for some aggressive traders. What do you think?
Yeah, you can draw a downtrend line, and this is actionable. It poked back above its 50-day moving average line. Another thing you can do is recognize that the utility electric power group is number 11 out of 197. So the utility group is up there. And another thing you can do is you can go to that related information in Market Surge, and you can just see, okay, who else is in this group? Go to industry and sector, then view stocks in industry. That's going to pull up all the other 35 members in this group. And a lot of times what I'll do is I'll just sort by either probably in this case, I'd probably use relative strength because sometimes the fundamentals are going to be a little funny on the utilities. So, you sort by the strongest ones, and then you just go through and look at the charts and see, hey, which ones look best? I mean, some of these stocks have not corrected hardly at all, even with the downtrend that we had a couple weeks ago. So you just kind of look to see, hey, are any of these set up? Is this a spot that I want any exposure? Or, you could always go with XLU just itself. And get, again, some of that exposure to the utilities, as well as access to that yield that a lot of these have as well.
Mm-hmm. And thoughts on the fundamental side here, Justin?
Look, this has got some losses from 2021 and 2022. 2023 did have profitability, but with a lot of the utility, stocks, you do see spotty earnings. They're more cyclical. And a lot of times by the time the earnings start looking good, that's a lot of times when they're almost done. So I don't use the fundamentals on this as much. This is more of I'm using the fundamentals in terms of what is happening in the industry to kind of guide me. And more than anything, I'm going to rely on the technicals. And when you see the move that some of these stocks have had on the technical side, it's hard to ignore.
Mm-hmm. Okay, so potentially actionable here. Let's see where it is versus the 10-week line. It's about 12% above the 10-week, so it seems like you would want to use either a percent stop or a recent low versus a decisive break of the 10-week for something like this, Justin. I guess unless you decided to go with a much smaller position size.
Yeah, that's also possible. What is it in relation to its 50-day moving average line? Because while they
11.8.
Okay, so it's pretty close. A lot of times, that those do track pretty well, but sometimes depending on the Friday close, it can be a little different.
Right.
So you can also, you could cut it a little bit tighter. Look, if this comes back into this area, I mean, undercutting today's low or Friday's low, that would kind of be an early warning sign that maybe this isn't working. Right. And again, it's not that you even have to go with Vistra. I mean, this one already had quite the move. You could certainly go for some of the other stocks, and we just showed you the way to find them. You just pull up that group and start hitting the space bar and go with the one that looks best.
Well said, Justin. Thank you so much for that. And thanks to everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all those details. We'll see you there. And then we'll also see you right back here tomorrow after the close.